Hello, and welcome to a special 2024 Look Ahead episode of the Corporate ESG 5 and 5, the podcast in which we spend 5 minutes exploring a key ESG trend set to shape the market this month. I'm Helen Ferguson from the ESG advisory team here at NatWest, and I'm joined today by my colleague, Roze. This month, in a slightly extended 5 and 5, we will be taking you through a couple of key ESG themes expected for 2024. The first is nature and nature-based financing. So Roze, to kick us off, can you share a bit more on the case for nature and why it's so important?
Yeah, absolutely. So nature is deteriorating globally and biodiversity is declining faster than at any other time in human history. According to the World Economic Forum, it's estimated that $44 trillion of economic value generation, which in other terms is over 50% of the world's GDP, is moderately or highly dependent on nature.
Thanks, Roze. So the case for nature is absolutely clear. And what impact has this had so far?
Well, the good news is that institutions across the world are mobilising to take action. In December 2022, at COP15, 196 countries committed to halting and reversing nature loss by 2030 and to live in harmony with nature by 2050. This has been followed by a range of nature-positive initiatives, such as the Task Force on Nature-Related Financial Disclosures, or more commonly known as TNFD, and they published their recommended framework to enable companies to assess, report, and act on nature-related dependencies, impacts, risks, and opportunities. The Global Reporting Initiative have also just published their new biodiversity standard to support companies to assess biodiversity impacts. And then we've also seen Nature Action 100, which is a global investor engagement initiative representing over $28 trillion in assets under management. And they're seeking to drive greater corporate action to reverse nature and biodiversity loss. And then finally, the Science Based Target Network are currently piloting science-based targets for nature, covering freshwater, land, biodiversity, and oceans, with the first validated targets expected in May 2024.
Thanks, Roze. There's certainly a lot going on, and I know there's a lot more to come. How will the increased focus on nature impact corporates in 2024?
That's a good question. We expect ESG reporting standards to increasingly incorporate nature. For example, some components of the voluntary TNFD framework have already become embedded in reporting legislation, such as the EU's Corporate Sustainability Reporting Directive, or CSRD. Companies are encouraged to get started with nature sooner rather than later. The TNFD recommendations are structured to allow companies to get started now, with the view that as familiarity with nature grows, management and disclosures will improve over time. The lessons learned from addressing climate-related risks can also help accelerate actions to address nature-related issues.
And finally, how is nature-based financing expected to develop?
Yeah, so historically, sustainable finance products have focused on climate-related initiatives, but they can also be used for nature-positive initiatives. So, for example, existing market guidance in the green loan and bond markets provide guidance on what constitutes nature and biodiversity projects. There's also ICMA's recently published Blue Bond guidance, which focuses on ocean-friendly projects and protecting critical clean water resources. And additionally, for sustainability-linked financing, the TNFD framework provides standardized disclosure metrics across different drivers of nature change, which could be considered as KPIs.
Thanks, Roze. I think that's a good point to segue to our next theme for 2024, which is transition planning and financing.
So, Helen, can you just explain what we mean by transition planning and financing and why is it so important?
Sure. So the IFRS S2 standard defines a climate-related transition plan as part of an entity's overall strategy that lays out the entity's targets, actions, or resources for its transition towards a lower carbon economy, including actions such as reducing greenhouse gas emissions. On transition finance, there are many definitions, but the common theme is a focus on the decarbonisation of high-emitting entities and/or hard-to-abate sectors. The two are very much linked, so a credible transition plan is fundamental in catalysing action and investment in transition financing to maintain the integrity of the market and to mitigate any risk of greenwashing. In terms of why they're important, there has been a significant increase in green finance over recent years. However, there also needs to be a significant investment channel to high-emitting and hard-to-abate sectors to help support their transition.
Thanks, Helen. That's really useful to know. From my research, one of the key barriers of scaling transition finance is that there are many definitions and no standard framework or taxonomy for relevant stakeholders. Do you expect developments on this in 2024?
Yes, absolutely. In the UK, for example, the government has announced that it will commission a review into how the UK can become the best place in the world for raising transition capital. The review will run for up to 9 months, so it's one that we expect to hear back on later this year. Alongside this, we will continue to see developments from the UK's Transition Plan Task Force as it works to build a gold standard for private sector climate transition plans. There are several outputs expected this year from the Transition Plan Task Force, which include finalising the sector deep dive guidance and the forward pathway on transition plans, as the Transition Plan Task Force looks to conclude its work towards the end of 2024. In the EU, there are several regulatory initiatives underway which require the development of transition plans, including the CSRD mentioned earlier and the Corporate Sustainability Due Diligence Directive. And lastly, in the US, the SEC has proposed a draft rule for public firms to disclose transition plans where they have adopted them voluntarily under their climate-related risk management strategies.
And thanks, Helen. What does this all mean for corporates?
So it's a good question, and I'd say the landscape is moving really quickly. So for example, in the UK, the FCA has signalled its intention to consult on the transition plan disclosures coming into force for accounting periods starting as early as January 2025 for large and publicly listed entities. So I'd say keep an eye out on developments, start having discussions internally if you haven't already, and speak to your partners to see how they can support.
Thanks for listening to this month's Corporate ESG 5 and 5, and we hope you found it useful. As always, please be sure to check out our monthly newsletter and LinkedIn content for more on the key ESG trends shaping the market. And if you like this episode, please follow the channel and click the notification bell so you can get future episodes as soon as they're released. Thanks again, and see you next time.